Sometimes it's worth it to take a step back to see how the crypto market has evolved over time, because that gives us hints of what might happen in the future. There was a very interesting change in dynamics in the year 2018. Have a look at the Bitcoin transaction count momentum. We grew quite consistently up until the beginning of 2018. Then came the bear market, less activity on chain, and only in the last 2 to 3 years could we pick up again. And that was mainly because of inscriptions on the Bitcoin blockchain. Have a look at the Bitcoin transfer volume momentum. Again, since 2018, this is not growing. And here's a chart that shows the situation the clearest. How many active addresses are there on the Bitcoin network? Again, we peaked at the beginning of 2018, and since then, we haven't really seen any growth anymore. The growth was so constant up until that point. So something has happened. There's another thing that happened. This is Bitcoin relative to the Nasdaq 100 or Nasdaq 100 ETF called QQQ. It shows how much better Bitcoin did compared to technology stocks. And again, it was the beginning of 2018 where suddenly Bitcoin didn't long-term outperform tech stocks that much anymore. If we just come down a bit more in the Bitcoin price, we have zero outperformance again over the course of 8 years. The beginning of 2018, the beginning of that bear market showed the real shift. Before we had nothing but growth in activity, in transactions. But from that bear market onwards, Bitcoin became an investment asset. It was simply just the existing investors that bought in more and more into the asset. But then the people that got all the gains, they tended to cash out long term. A lot of the growth that had happened up until that point is almost 7,000% outperformance. That led to people rebalancing their portfolios. And that rebalancing continues up until this day. And really, the fundamental problem is that the rebalancing or the profit taking by the long-term holders tends to rather accelerate. It's not slowing down, it's accelerating. The long-term holders don't see the outperformance versus other asset classes anymore. Have a look at the Bitcoin transfer volume measured in Bitcoin. So that's the orange area, and compare this with the revived supply. The supply that hasn't moved for at least 1 year. The revived supply spiked up massively recently. It was never that high. In other words, there was never that much long-term profit taking. Have a look at the same transfer volume, not in Bitcoin, but measured in US dollars. Again, this is massively peaking now. That's why we are going down. The selling pressure is not just short-term. This is the diamond hands that tended to hold for many, many years, suddenly offloading their precious favorite asset class, or at least what used to be the favorite asset class. This is a long-term trend. This is the Bitcoin coin day value destroyed momentum. Over time, the long-term holders are destroying more and more coin days, more and more long-term profit taking is taking place. And that profit taking is now strong enough to offset any kind of additional adoption, so that then we do not get the outperformance anymore. This metric is measuring what the dormant Bitcoin is doing. So if you've got 100 Bitcoin and you haven't moved this for 10 years, then you're destroying 1,000 Bitcoin years. If you, however, have only 10 Bitcoin and you haven't moved it for 2 years, you're only destroying 20 Bitcoin years. So the longer you've held the Bitcoin and the more Bitcoin you have, the more Bitcoin days you can potentially destroy. And when this is going up over the long term, it just means that the larger wallets that have held for a longer period of time increasingly are selling off. And that's the big problem. There is a turnaround point here, right? When the long-term holders sell at a quicker rate compared to new adoption, that's an inflection point. That's not pretty. Especially recently, we have seen negative long-term holder supply change. In other words, the long-term holders are selling off. This is, of course, fluctuating, but it's now the worst situation we have seen over the span of the last 3 years. I don't really like doing it, but that's how the YouTube game works. That's how the algorithm works. Please give this video a like if what you've seen so far has been useful. Thank you very much. The number of active addresses isn't growing anymore. The number of total addresses, though, is. And so we could just make the argument that maybe Bitcoin isn't used that much anymore actively for transferring value. It's just used as a means to store value. And why this is partially true? It's only true for the small potato. It's true for the people that don't have that much money. If we include the very small accounts, for the ones that have between 0.001 up to 1 Bitcoin, then there is still some growth. But once we remove that cohort and we only count wallets that have at least 1 Bitcoin, there's a clear turnaround that happened in 2024. And once we exclude even those wallets, then again, 2018 was the turnaround. If the minimum holding is 10 Bitcoin or a bit under $1 million US, we don't really have any growth anymore. The same way we don't have any growth anymore relative to technology stocks. Now, why is that a problem? Why is it a problem when Bitcoin can't grow another 40-50% per annum? It's an issue because some people set up their risk management that way. If Bitcoin only grows by, say, 7 or 8% per annum, then is MicroStrategy still long-term safe? That's a big question. Now, of course, measured in US dollars, Bitcoin is very likely going to grow over the next 10, 20, 30 years in a similar fashion how gold grows long-term. This is the US money supply, and it grows by 6.8% per annum. So this should be our minimum expected return for Bitcoin as well. I'd go so far to say that there is a good chance that Bitcoin will be able to keep pace with technology stocks. And technology stocks have outperformed monetary expansion. So over the last 40 years, tech stocks on average outgrew monetary expansion by roughly 2,000%. So that's annualized 7.8% more performance compared to just the monetary debasement. So you've got 6.8% compounded with another 7.9%. We do have increases in purchasing power over time, but we do also have this at the expense of a lot of volatility. And Bitcoin was created over here, right, in 2009. It never really has seen any real crisis. This here was .com, this was the global financial crisis. And while Bitcoin might be a great investment over 20 or 30 years, it might not be that great of an investment over the next 5 or 10 years. When we're looking at the long-term Bitcoin price chart, really we're looking at a market phase that looked like this, where risk on assets tended to appreciate versus monetary debasement, right? This is the Nasdaq 100 relative to US M2, an outperformance of 800%. There is positive correlation between the two, right? So when there was the COVID crash and technology stocks went down by 30%, then Bitcoin went down by 60%. Now, what's going to happen in case tech stocks fall again? In case we get a real crisis, something like the GFC or something like the .com bubble burst? The answer is we really do not know. But my guess is that Bitcoin will not do that well. I think that the vast majority of market participants in crypto underestimate how bad it could really be. I don't think many people in the crypto space have these kind of scenarios on their radar. Most people have zoomed in too much into the recent past. And the recent past is simply just everything that we have since Bitcoin's existence. Imagine we were not just to see a 30% drop, which then translates into a 60% drop for Bitcoin. But imagine the Nasdaq 100 was to fall by 50%, as it has done several times in the past. Just a drop like this, just a GFC-like correction, it could push down Bitcoin's price maybe by 90 or even 95%. Just imagine that, right? A 90% decline. Bitcoin's price suddenly being $12,000. How many people would still long-term believe in Bitcoin being the hardest of the monies, in Bitcoin being an alternative to gold? All of those narratives then go out of the window. Bitcoin is then simply just another levered speculative tool. But that's probably then also the best time to buy, right? When everybody has given up on Bitcoin, when the times are that bad that even the strongest pessimist is getting surprised. Now, very few crypto YouTubers are willing to share their own performance. I've created a copy trading vault where I traded for the community members, the premium members of this channel, and the performance is shown here at the top. So we're trying to achieve performance independent of the macro environment. We are up so far 17.6% since July of this year, while Bitcoin during the same time frame went went down by more than 22%. So we might be going sideways in Bitcoin, we are making money. We are going down, we keep our money. And the way we achieve this is with relative valuation trades. So we bet on altcoins to underperform that tend to have a rising supply, where the supply goes up faster than the demand. That then leads to those altcoins just long-term underperform versus the general market. So this is now Balancer relative to Ethereum. That's the Balancer supply chart. And we can simply just turn this around. So we just bet on Balancer going down relative to Ethereum. That's how we can make money in a market that overall might still be going down, but if the thing that we short goes down even further and at a quicker rate, that's then how we profit. And so there are two ways to benefit from this. You can simply just copy trade whatever I do. I always announce every trade that I make to the premium members in a channel in real time. Or you can join the next automated copy trading vault that will open again for deposits in January of 2026. That copy trading vault will be available to all annual subscribers. So I can simply start off with the monthly membership, and if you're starting to make first money with manual trading, you can also then swap to automated trading via yearly membership. I will, by the way, share my favorite trade once you join. So that's not Balancer anymore, it's something else. I will share that trade even if you just join on the monthly membership. And if you make money with that trade, then of course that's great. If you don't make money though, then I will refund the membership to you. So there's really no risk in just trying it out. If you don't make money with that first trade, I'll just send the $125 back. A link to Premium will pop up on the screen. It should be somewhere around here. Looking forward to seeing you on Premium. And again, thanks for watching. Cheers.